Getting right into today's action and the action for the whole week, we have Portfolio Wealth Advisors Lee Munson, who's going to help investors find promising picks in one of the biggest growth sectors that we have. We're talking technology here. Ron Wiener says investors are still skittish after the financial crisis, and that's actually good for the market. Leaves more room for individuals like yourself. Jason O'Donnell expecting one sector to continue improving. Is it time for you to get into that sector? And Scott Bauer at the CME. Scott, we got to start with the GDP figures. And I got to say, I'm wondering how many folks down there at the CME are wondering if the Fed's reluctance to raise rates is actually hurting real economic growth. Maybe it's helping the stock market, but is it hurting economic growth?
You know, it probably is. But David, you just a minute ago, you said you hit the nail on the head when you said, is the bad news good news or is the bad news bad news? And recently, the bad news has been good news. Today, actually, it paints a little different picture. So maybe the questions coming out of the Fed are starting to affect the economy. It is really starting to affect what we see here. But I think the bottom line is, and we had a little increase in volume today, but volume has been so awful over the last week or 2 weeks, up days, down days, doesn't really matter, that I think a lot of investors are really on the sidelines until we see the breakout move, which we haven't seen in quite a while.
Okay, so Lee, Ron, and Jason are the money guys here. I'll begin with Ron, and you all can answer this question, but were you spooked, were you surprised, or neither by this GDP number? Ron?
Neither. The U.S. economy is growing. It's sluggish, a little bit of a headwind because of the dollar, but it's still doing okay. So we're not going to worry about a bad quarter. Certainly, it's the earnings that's going to make the difference for every company. And we also think that why fight the dollar? Go to the euro. So buy more Europe, buy more Asia, and buy some emerging markets. They've been terrible for a couple of years. It's time to get into those two. You don't have to fight. The Fed's going to be fine. They're going to raise. They'll raise a little bit. They'll be out of their minds to try to raise aggressively. So I think the Fed's a non-issue. It's stocks and earnings, and go more foreign.
Well, Jason, were you buying today more than selling?
We were adding to the portfolio a bit today. I think the GDP number was not entirely unexpected, and our view is we're looking for about 2% GDP growth in the second quarter. That's really the key number that we're focusing on.
What were you buying today, Jason? What were you focusing on in your buy column?
Sure. So we were buying what we buy regularly, which is financials, and in particular today, small cap banks. We think the bank space has tremendous upside potential, and they're highly levered to interest rate increases. And we think Yellen was very clear last week when she spoke in Providence about what to expect going forward. If we get even moderate growth out of the second quarter, maybe some decent jobs numbers, I think we're looking at least 25 to 50 basis point increase in interest rates in the second half of this year.
Okay, so as we look at all of this, and it appears that many of you are looking forward and not backward, Lee, where do you look for the best values right now? Or do you kind of take a step back, take a few profits, even on a day where the market was slightly down? Or are you really fully engaged in what you feel are good opportunities?
You know, I'm not buying today, and it's not that I don't think we're in a bull market. Liz, we have to wait for that pause. We have a job reports number coming out a week from now, and I want to see when we know the bad weather is going to make that job reports look bad. I want to make sure that the market had the same reaction today. Meh, shrug it off, because if not, you could get that great correction that everybody's looking for. We're fully invested, but when I have clients send me some new cash right now, I'm sitting on that pile of cash, and then I'm going to deploy it sometime this year when the time is right. So I wouldn't go run to the hills, but boy, if you got a new influx of cash, I think you got to be careful and wait for it. And I'm a bull, and you got to wait for it.
We know you're a bull, and we're going to get to your picks, but Scott, I want to ask you about the jobs number. What happens if we do have a job number that befits today's GDP number? Will we see kind of the same sort of thing today, a low three-figure sell-off in the Dow?
Yeah, I have to be completely honest with you, and it's the flavor of the day. And when that number comes out, if it's a bad number, the question's going to be, is it bad or is it good because the Fed's going to, stay off the rate raise for a little bit here? So I think the number has got to be just blown out of the park, a poor number to see any sort of major sell-off. You know, the market is just set right now, and you could look at this from a volatility standpoint, look at it from the VIX. The market is set right now to trade in a very, very tight range. And unless we get some extenuating circumstance that we get a number that's all the way down at the bottom or all the way up over the top with that jobs number, we're going to trade in a very minor range.
Okay, so let's say the market's bumping along and we're trading in a minor range and there's no real movement. There are always breakout names. Yes. Ron, give us some of those. What you feel will be a name or two that will do better than the rest of the markets.
Well, a couple of them. First, we own an ETF called HACK. It's the cybersecurity industry. It's about 30 names. If there's any industry that's a growth industry, it's cybersecurity. So instead of one position, instead of owning these very volatile stocks, we own the basket. It's done tremendously well. That's an area that we think that will continue to grow. Second is activists. We've added that a little while ago, about 3 weeks ago, to the portfolio. Great numbers, great acquisitions. They're fast growing. They have 10 products that have all grown double digits. The merger with Allergan, or their acquisition of Allergan, you know, that's going to add a lot of cash flow, and they're going to be on the look for more companies. On top of that, let me add one more thing. We're not market timers. We think, as you said in the beginning of the show, that we think that the nervousness of the market is a good thing. The truth is, people can't time whole cycles of the market. To try to time a 5 or 10% move in the market, we think that's tough. So we're not doing it. We're staying fully invested.
I don't think many people are doing that. Lee certainly is not doing that. However, Lee, you're looking at technology, and you've got a very unique approach to investing in technology where the first person in is not always the winner, right?
That's right. You don't want to be that first person to create a like Cosmos back in New York in 1998. Nobody remembers what that is. Netflix crushed them. You look like a company like Grubhub, which we're buying for clients who, what? They want to speculate and get away from their beautiful broad-based index funds. That's fine. But you take a look like Grubhub. Is it going to destroy competitors and other businesses? We've had restaurant delivery services for 20 years. Grubhub is just going to take it to the next level, the way Netflix killed Blockbuster. Secondly, does it create entrepreneurs? You know, they're creating these people who are creating food, and they're being able to distribute those meals through an electronic platform, just like Apple gave coders the ability to create apps. And do they play well with others? You've got to have integration. And Grubhub, when asked, you know, is Uber going to start delivering food, how do you feel about that? They were very clear. It's great because we make the food, and they'll be able to be another place to deliver it. So those are the three things, because valuations, keep it for your money manager, keep it for your asset classes. But when you go into technology and you want to speculate, will it destroy?
Gotcha.
Are they going to create entrepreneurs?
Okay,
do they play well with others?
Good to see all of you. We've got some breaking news. So Lee, Ron, Jason, thank you very much. And Scott, you too.
Have a good weekend, gentlemen.